Good morning everybody and welcome back to a Chart Nerd technical analysis video. Today we will be discussing Realio. The ticker is RIO against USDT on the weekly time frame. In my previous update I was speaking about from this current all-time high, we had this 5-wave corrective move back down towards a key level of support at 62 cents. So from our current all-time high, we're tracing back down to these October lows of 2023. The 0.5 range at 62 cents is a key level of support. So what you'll notice is this wave 5 here fell down to 65 cents. So we haven't actually come down to this 0.5 FIB yet for a level of support. Now just a quick breakdown of this 5-wave move. So from this all-time high, we pulled back here to the weekly 20 EMA, this yellow line. So this is the weekly 20 EMA, and we've also got this red line here, which is the weekly 55. So on our wave 1 correction from the all-time high, we found support on the weekly 20. At this point, we rallied up, but we failed to take out the all-time high, and we put in a lower high for the wave 2. Now wave 3 from this wave 2 came down and lost the 20 EMA and actually met support on the 55. So we came back in wave 1 to support on the 20, put in a lower high, indicated depleting buying pressure. From that wave 2 into wave 3, we lost the 20 and found support on the 55. Now from the 55 wave 3, we rallied back up into the 20 for wave 4 and got rejected, followed by wave 5, which pushed us down to sweep the wave 3 low and work our way towards this golden FIB ratio at 62 cents. So that is the breakdown of this 5-wave correction thus far. Now, what is bothering me slightly is the fact that we closed last week underneath this 55 EMA. And right now you can see that RIO is tapping against it and trying to get back above it. Now, if we do see some sort of relief here and we get back above it, we do have this weekly 20 EMA that is coming down on our heads as another level of resistance point. So we do need to watch out for this weekly 20 EMA. If we get back above the 55, the 20 is the next level of resistance we need to get back above in order to start retracing back to these local highs that we've been falling from. So right now we need to see RIO close above 0.090, which is where this 55 sits on the weekly. Because in validating that, if we do fail to close above it and we keep seeing rejection under this 55, I think it would give more confirmation to the fact that we could potentially finally be on our way down to this 62 cent. Because within the wick, right here, we fell just shy of this target. It's not actually been met yet. And these wicks do tend to get filled when they come into play. So right here, for example, we had this wick in April of 24. It took 1, 2, 3 weeks to actually come in. Sorry guys, it took 3 weeks to actually come in and fill this wick. So it wasn't until the 29th of April that we came in to fill this wick candle here with a close. Okay, so these wicks do generally tend to get filled, so it wouldn't surprise me if we do see relief here and start coming back up. The 20 EMA is a key level of resistance. If we run into that and start pulling back for a higher low, then I would expect some sort of double bottom foundation here where we've come under the resistance, come back for another level of support on this 0.50, hold this, build some sort of foundation under these EMAs as they're coming down, and we have to get back above them, guys. Okay, to confirm bullish confirmation, these EMAs have to be broken back above. I've said many a time before, when you start getting above these EMAs and holding them as support, this is where you're in an uptrend. When you start losing the EMAs and hitting your heads on them as resistance, this is when you're in a downtrend. So right now, the trend is our friend until the end. We are sort of dragging these EMAs down, and what we don't want to see is a death cross. Because I've noticed on many projects that they've already put death crosses on their weekly time frame. So if I have a look at Telcoin, for example, is this Telcoin? Yeah, if we have a look at Telcoin is bouncing off of a key level of ascending support that it's been holding since October of 23. But as of recent, on the 29th of July, we put in this death cross. So right now we've got the death cross, but we've also come down to a key level of support. So right now I'm expecting relief back into these EMAs on Telcoin for a decision. And there's many other projects that I can show you guys that are in similar sort of territories. Now, RIO hasn't formed its death cross yet. It hasn't formed its death cross. Does it mean that it can't form one? No, it doesn't. Of course, it can form one. But right now, we are seeing some relative strength in regards to RIO compared to other coins that have already put it in. But let's not be misguided by the fact that it can't happen, because it can. Okay, it can happen. But to negate this, I think as long as we can hold 62 cents and sort of build up some sort of base over here, let the EMAs come and be choppy on our heads, but we have to break above and negate the death cross. And as I said, start getting back above the EMAs to start retracing back to these highs that we've been falling from on the weekly time frame since our all-time high at $3.13. So there's a lot going on, guys. There's a lot going on. But for me, it is all about holding this 050 range, 62 cents. That's all I can say. I think it's just about holding that on the weekly time frame, the macro, holding this sort of level, actually coming down to fill this wick, put in some sort of double bottom and build up a base here underneath these EMAs, looking to get back above them and confirm that this was just another higher low from the trend that we've been in. So you'll notice that we had this sort of structural double bottom down here. This is kind of what I would like to see underneath these EMAs. Right here, I would like to see some sort of build up of a double bottom over time before going for the breakout. Just like we did here, we had this sort of double bottom here, right down to a key level of support. And eventually, since that, we didn't look back and we held these EMAs as a key level of support. Right now, we've come down in a 5-wave correction. We've lost the EMAs. We have to see a foundational base built around 62 cents to validate continuation back to these local all-time highs for us. It's literally that simple. It's literally that simple. Now, if we do come back further and say we run into this EMA and get rejected as they're coming down and be pushed further down, then for me, the last line of support for RIO sits at 42 cents. And this could provide absolute optimal opportunity if it comes in. It would scare the hell out of people. It would really scare the hell out of people. But there's something to consider here. There's something to consider. One, a lot of projects have already put in their death cross. Again, as I'm saying, it's not impossible for RIO to keep correcting here, put in the death cross. And if that death cross does occur, and we do fail to, say, tackle above these EMAs as they're coming down, what we might see now is this coil up under the resistance. But if we form the cross and run into it, this is where we could see that last sweep down to 43 cents. Now follow me on this 0618 line to the left. What you'll notice is it was previous resistance back on the 3rd of April 23. Now, since breaking out of this high at 43 cents previously from this double bottom, once we actually broke out of the 43 cent range and put in the all-time high, we haven't backtested this zone for support. So that is another crucial area for me. If we do see a death cross form on the weekly time frame here and we sort of coil up and fail to get back above the EMAs, then look for the sweep of 62 cents coming back down to 43 cents on this previous level of resistance that hasn't been back tested as support since we broke out of it. Where was we here? In November of 23. So this is a very highly likely scenario too. But as I've said, right now we've got this 62 to 63 cent low that we're currently holding on this wick. I think this wick potentially would get filled over the coming weeks. And then it's all about getting back above these EMAs that are on our heads. It's all about getting back above them. I think we will see some sort of choppiness. And if we can build some sort of double bottom base and get back above them, fantastic, okay, because that's our go sign to retrace back to these highs. But failing to get back above the EMAs as they're coming down on our heads, and if we fail to get back above them and continuously hit our heads on them, then I would expect a sweep of 62 to 63 cents, bringing us back down to 43 on this key level of resistance that we haven't, as I've said, back tested yet for support. At that point, I think the 0618 would offer optimal opportunity, guys. So key points to take away from this video: the 050 I think will have some sort of foundational double touch point over the next coming weeks, and if we can build a foundation here and get back above the EMAs, fantastic. I will monitor as we go along. Failing to do so, if we keep hitting our heads on resistance and failing to get back above these EMAs as they're coming down. At this point, I would expect the 050 to get swept and us to continue this correction to 43 cents. The trend is your friend until the end, guys. I hope you enjoyed the content today from Chart Nerd TA. Take care. Peace out.